So, today we are diving deep into the latest chapter of the Gold Mining Expert's Cinematic Trading Journal. This is week 20 of 2026.
Right, and we're looking at this as a grounded, analytical explainer of their $25 cent account challenge. No hype here, just a very real look at what it actually takes to survive and grow in the foreign exchange markets using an expert advisor.
And right off the bat, the system just crossed a huge milestone, 32.5% lifetime growth. You know, in an industry that's completely obsessed with get-rich-quick schemes and overnight Lamborghinis, this documentary approach is honestly so refreshing. We aren't talking about reckless, explosive gains. We're observing the quiet, grinding mechanics you absolutely need to survive long-term.
Exactly. The whole philosophy here is total transparency. Look, algorithmic trading is never a straight line up. It's just not. It's full of floating losses, complex recovery behaviors, and moments of really high equity pressure. So we're going to break down exactly how this EA navigates those ugly drawdowns just as effectively as it handles the profitable swings.
Now, to really understand the algorithm's performance this week, we have to look at the battlefield, right? The US dollar versus the Canadian dollar. Week 20 brought a relentless US dollar, mostly driven by shifting Fed expectations. Combine that with some serious oil price volatility, keeping the Canadian loonie on the defensive, and well, the result was a massive, sustained bullish wave.
So let's see how the system actually handled that wave. If you zoom in on the 15-minute chart, that upward market trajectory is undeniable. Check out the blue buy arrows plotted right along the push. Instead of fighting the trend, the algorithm accurately read that momentum. It scaled into buy positions and basically just rode that continuing US dollar dominance. And when you drill down into the actual trade history, the execution is incredibly disciplined. You'll see the system scaled its lot sizes from 0.19 down to 0.03 and patiently rode out the intraday volatility over a multi-day hold. That move secured a gross profit of $69.71 plus a positive swap of $4.16. And remember, that swap is basically just overnight holding interest working in our favor. Those precise entries translated into a really solid 2.31% gain for week 20. To put that into perspective, that's an additional 73.87 cents added to the bottom line. Capturing a steady 2% weekly gain in an aggressively trending market like that, that's a real testament to the system's underlying logic. But let's talk about how that profit was actually achieved. If you look at the blue line, that represents the locked-in balance, stepping up beautifully to 3,269 cents. However, the purple line, the floating equity, shows the real-time market pressure. The equity dipped as the EA absorbed market fluctuations while holding those open positions. Honestly, that's simply the reality of running grid-based recovery system. Right. But what's fascinating is that despite that floating pressure, realized drawdown stayed at a flat 0%. The system managed its floating positions through really disciplined grid and Martingale cycles. Basically, it scaled into trades to mathematically recover losses, and it did all that without having to close a single trade in the red. It absorbed the pressure completely.
Taking a step back from the micro to the macro view, a flawless 73-cent week feeds directly into a broader lifetime total of over 805 cents in profit. This perfectly illustrates that institutional-grade algorithmic trading isn't about swinging for the fences and hitting daily home runs. It's about the relentless, almost boring consistency of stacking small wins month after month. And all that stacking brings the current balance up to $3,269.09. Remember, operating a cent account rather than a standard dollar account gives the algorithm maximum granularity to manage its risk. It's absolutely crucial. Every single cent is a calculated step forward on this long-term road to the 10,000 cents or $100 milestone.
Looking at the broader lifetime equity curve shows exactly why there's absolutely zero panic during short-term dips. If you trace that purple equity line through the data from 2025 and 2026, you'll see it routinely dips, absorbs the pressure, and then cleanly recovers as the balance steps up. This week's floating pressure, it's just standard, highly calculated behavior. You can really see that underlying strength quantified in the lifetime metrics too. Beyond a highly active 84.7% trading rate, the system operates with an efficient profit factor of 2.11. That means gross profits are literally double the gross losses. But the real standout for me is the recovery factor of 5.6. That proves the algorithm mathematically recovers from risk far faster than it actually accumulates it.
And that efficiency creates a beautiful asymmetry of risk. Think about it. While lifetime growth has steadily climbed to 32.5%, the maximum historical drawdown has been strictly capped at just 5.27%. Achieving over 30% growth while rarely exposing the account to even a 5% drawdown, that is the hallmark of a deeply disciplined system for sure.
So let's just weigh the ultimate realities of this strategy. Floating open trades in the red isn't a flaw in the code.
No, not at all. It's the necessary fuel. It powers those grid cycles, giving the algorithm the leverage it actually needs to eventually close the entire basket in total profit. The relationship between recovery cycles and floating equity pressure is everything here.
Looking forward, the focus remains totally locked on the road to $100. By thoroughly documenting this steady progression, the gold mining channel isn't just growing an account. They're building a verifiable public track record. They're laying the rigorous groundwork needed before potentially turning this EA into a public copy trading signal. As we close the books on week 20, the macroeconomic landscape is only getting more complex. With shifting central bank tones and crazy energy market fluctuations, the Canadian dollar will undoubtedly face new tests. Will this disciplined recovery strategy continue to hold strong when global market volatility spikes in week 21? Thanks for joining us for this explainer of the gold mining journey, and make sure you stick around for the next update to find out.